Hello everybody, welcome back to my channel Trading Secrets. This channel is for entertainment purposes only. For those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. Through this channel I'll be providing some stock analysis and a quick update on the $1 Million Challenge. So if anybody's not aware of this is a journey of investment of $1,000 to a return of $1 million over a period of 3 years using a strategy called compound return investing. So the objective is try to get 201 trades, each an average return of 3.5%. It's not 201 consecutive trades, we do take into account losses. So for further details about how to join us for less than $9 a month, information is available in the description below. In today's video, I'm going to be looking at a more detailed comparison of Pioneer Natural Resources versus NextBridge Hydrocarbons, including valuation and potential share price. And I'm sure you know by now that Pioneer have just agreed a $60 billion sale to Exxon, so stay tuned for that. We're also going to be looking at our review of the weekly watch list. So before we get started, let's have a look at what's happening in the market. So first headline here from Reuters: the ripple effect on markets globally from Middle East conflict is now taking place, and I think there is going to be upside in defense and oil sector stocks. So we're going to come back to that shortly. So in other news, this is also going to be a big week for earnings. So we can see here for the week beginning October the 16th, we're going to get earnings for some significant stocks, including Tesla on Wednesday, Netflix on Wednesday as well. So we will be watching them carefully. And let's now move on to have a look at the news from Unusual Whales, and this is something that we have looked at before. So they've stated here, just in, Senator Thomas Carper profited on his shorts in the US economy, and he has been one of the best traders in office for 40 years. So much so that he's become a multi-millionaire many times over on a modest federal salary. So there is a breakdown of how he's made some of his money. So first of all, according to Unusual Whales here, he bought very, very heavily into Pfizer in 2020. His return on average in pharmaceutical stocks is close to 100%. He also purchased NVO, Danish pharmaceutical company, which lobbied and testified to the Senate Health Committees. And on that one, apparently he was up 180%. So I think if this was a director of a company, he could be obviously charged with insider trading, but not obviously this person we're talking about here, Thomas Carper. So he also invested in pandemic beneficiaries such as Disney and CVS. March 2020, he also bought DGX that did COVID test, and that was not something that was widely known, but obviously he did know. And Carper also has traded very heavily in semiconductors like Nvidia before the CHIPS Act. I'm sure he knew about the CHIPS Act, and he had the second highest return of any Senate member for semiconductors. So congratulations to Thomas Carper for making a dishonest living. Now make a start on looking at the comparison of NextBridge Hydrocarbons with Pioneer. So before we get started, a quick reminder of the news. So shout out here to the Financial Times with the headline, as big as Saudi Arabia, the Permian oilman who sold Pioneer to Exxon. So we have Scott Sheffield, who is the CEO, and he also built the company, and the company is the biggest producer in Texas. So in terms of the deal, we know that this is for $60 billion, and it's operating primarily in the Permian basin of Texas. So according to Scott, what he's saying here is obviously when you include all the natural gas and natural gas liquids with the oil, he believes it's as big as Saudi Arabia. In terms of the Exxon deal, this was something that was not foreseen. It was very, very quick. It wasn't expected, but obviously the company have now agreed, and I believe that is going to be finalizing in 2024. So let's now have a look at the deal in terms of the company presentation. So this is an investor update that they shared on the 11th of October 2023. The merger of ExxonMobil and Pioneer enables a unique value creation opportunity. So we're going to delve into this a little bit deeper now and have a look at potential implications for the future for NextBridge Hydrocarbons. So what we can also see here is that the deal unlocks significant value for shareholders, and we can see in terms of the exchange ratio, this is 2.3234 ExxonMobil shares for each Pioneer share, and that represents a market premium for the asset. We're looking at approximately 18% premium to Pioneer's shareholders based on the closing price on October the 5th, and also a 9% premium based on Pioneer's 30-day volume. So good news for the Pioneer shareholders there. The deal, as we can see, is also expected to close in the first half of 2024, and both sets of shareholders will expect a significant upside according to that. So if we have a look at the operating areas, we can see it combines and transforms ExxonMobil's upstream portfolio and creates industry-leading, undeveloped, high-quality, high-return US unconventional inventory. So it adds 856,000 net acres to the Midland Basin, to Exxon's 570,000 net acres from ExxonMobil in the Delaware and Midland Basin. So Exxon is going to have a huge amount of land now, and it more than doubles Exxon's Permian production to 1.3 MOEBD based on 2023 volumes. So great news there for Exxon. And let's now have a look at the information with regard to the Permian Basin. So this is obviously something that is in West Texas. It's home to the second largest oil field, and Pioneer staked its claim just 10 or at the beginning when it was operating just 10 or 12 barrels a day, and they have stayed the course, and now it is paying off. So obviously they've been through hard times, very similar to Nexbridge Hydrocarbons, and obviously they believe that this area is very significant in terms of untapped. So good news in terms of a decision for them to become an important player in the Permian, and they believe they are going to be changing the world in the future as well. So let's now have a look at a comparison of both companies. So special thanks also to AK Dallas for some of the information that he shared in his post, and as well as to the presentation and the news articles. So if we look at both companies here, the location Natural Resources is in the Permian Basin, Nexbridge Hydrocarbons also Permian and Oro Grande Basin. In terms of the acreage and land, Pioneer has approximately 834,000, obviously more widely spread out. Nexbridge Hydrocarbons is a smaller amount of land, but still 134,000 acres, so that's still quite significant. However, their assets are more concentrated. They're also acquired near accessible water, and also near good transport links that we've seen in the previous videos. In terms of type of company, we know that Pioneer is trading on the New York Stock Exchange, ticker symbol PXD. It's currently a company that's generating revenue and also pays an annual dividend to its shareholders, whereas Nexbridge Hydrocarbons is a private company but public reporting due to the number of shareholders, and it's currently a company that is involved in exploration and development of its assets, and primarily it is still pre-revenue. So let's have a look at the assets and compare them. So for Pioneer, we're looking at their proven assets are 2.3676 billion barrels of oil or equivalent, and this comprises of 41% oil, 23% gas liquids, 28% natural gas, but they also have many more active wells to generate all this, approximately 5,700. With regard to Nexbridge Hydrocarbons, it's more a case of the oil and equivalent is more estimated. So we're looking at between 3 and 7 billion barrels of oil or equivalent according to the presentation from the company. And in addition to that, we have an estimated 5.7 trillion cubic feet of gas, and that's also equivalent to 950 million barrels of oil equivalent in addition. So as well as that, we know that the company have undisclosed natural water supply assets as well. So the overall conclusion there is the assets of Nexbridge Hydrocarbons are much less developed compared to Pioneer Natural Resources, but from my point of view, I see much more huge upside potential long term, certainly, as well as a good example of a potential company to be acquired for the assets. So let's have a look at the shareholders. So Pioneer have approximately 233 million shareholders, Nexbridge Hydrocarbons 250 million, so not too much a difference there. So now let's have a look at the valuation. So the valuation of Pioneer Natural Resources, according to Shell, the Shell deal was approximately $60 billion, and for each shareholder this equates to approximately $253 per share. And in terms of the assets, it is valued based on the assets, approximately getting $27 per barrel of oil or equivalent. So that's how that works out. So let's now have a look at Nexbridge Hydrocarbons. So the difference here is because we are using estimated figures. We don't actually have a specific amount. So based on the estimates, the per share value is going to be lower because obviously we're not in complete production yet, and more speculative due to the amount of oil. We don't know if it's 3 billion, 4 billion, 5 billion, 6 billion, 7 billion. So if we use the more conservative 3 billion, and obviously they've got approximately $27 per barrel of oil equivalent, we're not going to get that. We're going to get a much lower figure. So I believe on a conservative level, this could be $10 a barrel. That could equate to $119.44 per share based on a conservative value. Obviously, we know the price of oil is going up, and it is likely to continue to go up. So yeah, again, if we use the basis of $14 per barrel, we know oil is trading close to $100 now, but we're not going to, that's what the company will get. We will not get anywhere near that, but $14 a barrel in the terms of a sale of assets would still net us $167 per share. And then if we use a more optimistic calculation based on 5 billion barrels of oil or equivalent, and then based on $10 per barrel, we're looking at close to $200 per share, or $199.07. And then a bit more of an optimistic prediction, 5 billion barrels of oil or equivalent at $14 per barrel, that would give us $279 per share. So we're not there yet, I do agree with that. And what is required to get there? So what is required is obviously the shares have to be reconciled. At the moment, we are going through some disputes with some of the market makers, with FINRA and with broker dealers, and currently trying to resolve that through Congress and also through some litigation that is going on. And that is one of the problems that we have. And also what is also required is for the company to continue drilling, which they are doing, and we've seen that recently. And if they continue to drill, there is going to be more proof of assets, more proof of oil, and that is exactly what is needed for a sale of assets. So remember, the key message from Pioneer is the company was not for sale and it was suddenly sold. NextBridge Hydrocarbons is also, according to the insiders, they are saying it's not for sale, no plans to sell, but that could change in an instant. Finally, I'd like to finish off by having a quick review of our weekly watch list, as well as some of the stocks that we called out in our daily stock alert. So I'm sure many of you will know that earlier in the week we called out tick symbol TPST, also known as Tempest Therapeutics, and this is something that we called in our biotech channel, where we were expecting news to be shared with regard to their phase 1, phase 2 trials regarding liver cancer. So this was also something that I'm sure many of you by now will know that went up at approximately 4,000%. So definitely one of those stocks of a lifetime. So congratulations to everybody who got in on that. So as well as the daily stock alerts, the other stocks that we called out this week included PRZO. That was up 55% on Friday and also up 50% on the week. IMNM we also called out, that was up 13.7% on the week. VCNX, that was up 17% from Monday's dip, with also 3 opportunities to get returns of 15% plus. PXD was up 3% on the week, so again good news on that one that we've just seen in the video as well. IMVT was up 5.7% on the week, so good news there. RBLX, that was up 2.9% on the week. COUR, we also called, that was up 2% on the week. MGAM, 3 opportunities there to get returns of 14% plus, so always a good idea to take profits on these kind of stocks. There was a sell-off after Thursday, and it did close down 19.7% on the week, so always good to protect profits, as not all calls are successful. And finally, if you would like to get the next weekly watch list as well as daily stock alerts, details are in the description below. Thank you very much for watching. Please stay tuned.